we had a client come in and their mother had passed away, and they had received a lot of assets and income that they, of course, couldn't avoid. They had to sell some things. And when she came in, the first thing she said was, "Oh, my goodness, my IRMAA is killing me." So what in the world is IRMAA? What does it involve? How does it affect retirees? Talk to us a little bit about what that is.
Yeah, so Aunt IRMAA is the aunt that we never want to visit us, but
That's
sometimes
right.
does if we're not aware. And Aunt IRMAA shows up 2 years later is the problem. So IRMAA, or also known as the Income Related Monthly Adjustment Amount, is a surcharge that some folks who experience either higher income throughout retirement, or they have a one-time windfall, like it sounds like the one that you're talking about where they inherited something.
Right.
It is related to how much someone will pay for their Medicare Part B premium and Medicare Part D. And it's related to what's called MAGI, Modified Adjusted Gross Income, and Social Security when they're determining Medicare premiums for the current year. So, for example, 2023 premiums, and for most people this year, it actually went down, right? It went to 164.90. Last year, it was 170.10. So we actually got a reprieve. But for most folks, that's what they'll pay. But if their income, and Social Security looks at the income 2 years prior, they're looking at that modified adjusted gross income, which is adjusted gross income plus tax exempt interest. If that income goes above a certain threshold, so for 2023, if 2021's MAGI for someone who's single was above $97,000, or for married folks that are filing jointly is above 194,000, then you start getting into this, what I call IRMAA territory. Mm-hmm. And so oftentimes you don't think about it. You think, well, I inherited this, but what's happening? I never heard anything about it until I got my letter for 2023 saying I'm going to pay an income related monthly adjustment amount in addition to, so it's a surcharge in addition to the standard premium that most people pay, right? So that's the rub. And so what I always say is, I have a presentation that I do that's the critical ages of retirement income planning. And I always include age 63 in there. And everyone's like, 63, that's kind of a weird, we've got the age 50 for catch-ups, and we've got, 59 and a half is a magic age because the 10% penalty doesn't apply. Why 63? And I say, well, for folks that are going to enroll in Medicare, most people at 65 do. Now, there's some circumstances where they may not, right? They still have creditable coverage through a health, an employer-based plan or their spouse's plan, certain situations where they won't. But at 63, that's when they're going to start looking at your income. So go back to your person that said, wait a minute, I inherited this. Well, the likelihood is this inheritance probably occurred 2 years ago, and it's just now catching up with them. Now, what happens with, let's take the 65-year-old that has now retired, but at 63, they were still working, and they're saying, wait a minute, that's not fair. I was still gainfully employed. So of course my income was above that limit. Why am I being charged an IRMAA 2 years later when I'm truly, now I'm retired? So there are certain things called life-changing events that will that the Social Security Administration do consider ways to say, hey, wait a minute, no fair, get Aunt IRMAA out of my life because 2 years ago I was still working, now I'm not. What are those? So it's not things, unfortunately, like an inheritance. It's things like marriage, divorce or annulment, loss of a spouse, death of a spouse, cessation, work stoppage, or pullback on work hours. Loss of income producing property. Now that isn't things like I sold a house and I lost the house, but now I got this big fat capital gain. That doesn't qualify. So there are certain things that are considered life-changing events so that if someone says, wait a minute, I'm being notified that I'm going to pay this extra premium, this surcharge, how do I get out of it? Well, there is a form, SS Form 44, life-changing event form, that the person can say, wait a minute, let's use a more current year of income to substantiate why I shouldn't have to pay it. So IRMAA is something that for folks that have planned well, that might have sources of income that might be consistent and put them over it. Those are the folks that need to worry. or the people that have just a 1 year. Now, here's the good news about Aunt IRMAA as well, is that if this is just a one-time event, so an inheritance, and that somehow that there's a taxable event, let's say it was an IRA inheritance, for example, and it did bump up the Magi above the limit, then that's only a rub for a 12-month period, right? Because once they go back and they look again at the next year's Magi, then if it's within the thresholds of the standard premiums, it goes back down. But the other side of that is, let's suppose you have two people on Medicare. Does it affect both of them? And the answer is yes. For that 12-month period, it's going to affect both of them. So you have to you have to start forward planning when you're working with your financial advisor to say, okay, let's make sure that we are cognizant of the fact that what I do now is going to affect me 2 years from now if I'm well above it. So we have to think about those things.
That's super good, because in the situation we were talking about yesterday, and Heather, you'll certainly understand this. I'm sure minds of a lot of people are spinning right now trying to think back to 2 years ago and how that affects the future. But this person received inheritance because a spouse died. There was a business account, and their financial advisor and their CPA didn't explain anything about what would happen if she took a distribution from an S Corp account, which was tax deferred. She took $100,000 out in December and $100,000 out in January. So guess what? That's 2 separate tax years. Right. So that messed with Aunt IRMAA. I'm stealing that, by the way. That messed with Aunt IRMAA for the next 2 years. And she, just so that people can understand the impact, and I'll have you speak to the specifics of it, but she said her IRMAA, or her Medicare premium, went up from like 146 to 500 and something, just so that people understand this isn't like a $20 surcharge. So it can be a big deal, right?
It can. In fact, I'm trying to think this year, I don't know if I have it written down somewhere, but it can go up to upwards of $500 a month from the standard one. And it's a graduated scale. The other thing is, it's not like taxes and Social Security benefits, which it's not a cliff situation, but IRMAA is. So the moment that you go $1 over into the next premium band, you're paying it for the 12 months. So you really have to work with someone and advisors who understand, because I tell you what, I know you and I both do it, Brad. We're like 63, that 63rd year, if you're planning on enrolling in Medicare at 65, you need to start thinking about the planning strategies that you're using. Because the other thing we're always trying to do is mitigate taxes in retirement, right? So what's the one way or a good way to do that? Roth conversions is a very good planning strategy, particularly while I say taxes are on sale through the end of 2025, right? They're going to sunset back up to the pre-2017 Act's tax rate. So people are doing these strategies that in the long run are really good for helping mitigate the risk of tax erosion on retirement income. But you have to be mindful of, is this going to affect my IRMAA premium? my Medicare premium through IRMAA? Is she going to come visit me? Is it worth it? Some people might say, well, I'm going to go ahead and take IRMAA in for a year and pay the piper just so that I can do that type of planning to get me into a better place down the road in retirement. So you have to just look at these strategies, and even Social Security claiming, even Medicare premiums. It's all so holistic. You can't look at anything without looking at the other thing, right? So that's why we do, and that's why we have a passion for what we do. It's like we all have to come together and say, okay, what do we really need to look at? It isn't, I should file for Social Security at X date. You can't do that without looking at everything else that's going on, right? Very,
very good. And I know we kind of went long in this segment, and there's because this is such an important topic. Just missing one thing or not knowing one thing can really impact your taxes and your premiums for the future. So make sure that you're working with a retirement income certified professional who knows all aspects of retirement planning. That's what we do here at Safe Money Radio. Hunter and I are both RICPs. Heather is an RICP. So if you want someone to give you a free financial consultation and take a look at your specific situation, just call us anytime and request a free financial consultation. You can call us at 866-780-SAFE. That's 866-780-7233. I'll even give you a copy of my book, Bulletproof, The Safe and Secure Retirement Income Plan. And the foreword for that book was written by America's IRA expert, Ed Slott. So call us anytime at 866-780-7233. There's someone standing by right now to take your call.